Okay, people. I'm sending you all this video just as a brief, well, one of my first videos of many. I will need your feedback as to whether or not you guys understand the concept of currency trading. All right. I'm going to be posting those on YouTube, my YouTube link, my YouTube page, so you guys can always follow through there. All right. Once again, my apologies about last night's GoToMeeting webinar. That just did not work out. All right. So I think the videos will work better. All right, so let me just first cover what Forex currency trading is. All right, Forex currency trading is basically what you're doing. You're buying and selling money. It's a simple transaction similar to you taking a US dollar and going to the bank and getting EC dollars for it. That's all it is. But you can do it on in an environment that is basically a worldwide environment, a worldwide market where more than $4 or $5 trillion changes hands every day. All right. So long story short, you can buy and sell, market, good to go. Alright, the first thing you need to do is find yourself a Forex broker. Alright, you can either do forex.com, you can do Alpari, you can do FX Street. Alright, there are several of them out there, but I'm currently registered with forex.com. Okay, so you can go and Google them and open a demo account with them. Now, when you open in that demo account, they'll ask you for some basic information. Alright, they'll also tell you, well, when you open the account, they'll ask you how much you want to open the account with the demo account. You can tell them basically, open the account with $500. I will not tell anybody to do a $10,000 demo account. Alright, so you go to forex.com, for example, you open a demo account with them. The demo account that you want to open would be a MetaTrader 4 demo account with forex.com. Alright, that is important. It must be a MetaTrader 4 demo account. Alright, they will allow you to download the software from the website. You download MetaTrader 4 and you install the software. Okay, now after you download and install the software, basically that software is gonna, when you connect it to the internet, is gonna connect back to all the servers in the US, in Bahrain, in Japan, Australia, wherever. It's gonna connect you to the market where you can buy and sell. Alright. Um there's something called leverage that you guys need to know what leverage is. Basically, if you open a demo account with 500 US dollars, some of the brokers will allow you the buying and selling power of a 1 to 200, meaning your $500 will give you the buying and selling power of $100,000. It's that simple. Leverage is good and it can also be very bad, but that is how you make money trading. The leverage allows you to make some money. Alright, now Forex currency trading is not like the New York Stock Exchange where you buy stock and you hold for a year. For example, today Apple is worth $40 on the New York Stock Exchange, and you buy 100 shares of Apple today at $40. That's $400, right? Or should I say $4,000? Sorry, bad maths. So you spend 4,000 US dollars, and now you own 100 shares of Apple. You hold that for a year. After a year, the shares are now worth $6,500 or $65 a share. You profit almost $2,500 a year after. Right? That is stocks. I trade stocks, but stocks to me right now, it doesn't bring in as much income as I expected to. So right now I do a lot of currencies. Currencies is different. With the currency market, you can make money if the value of your currency pair goes up, and you can make money if it goes down. Unlike a stock, if you bought it at a low price of $40 and a year later it's worth $25, you lose money, right? At the same time, for the currencies, if it's when you buy it low at a low price and you sell it at a high price, you make money. If it's at a high price and it's about to fall or it's falling, you sell it, you still make money. Right? Currency trading has a significant risk element attached to it. I'll be honest with you guys, my first 600 US dollars that I invested 4 or 5 years ago, I lost that. Alright, I did not know what I was doing. I was not guided properly, but basically if you do not invest, or if you're looking to go into it, you cannot invest money that you cannot afford to lose. So if you're willing to lose like 500 US dollars and you figure, okay, I tried investing that and I lost it, fine. Right? Something you guys should know, 90% of all Forex currency traders lose their money in the market. The 10% that make it are those that either attach themselves to fellas that already know the game or know what to do, or people that just good at what they do. All right, 10% make it. So I don't know if you'll be that part of that 10%. I think I fall in somewhere between the 90 and the 92%. I had to show it. So, anyways, all right. So here's how it works. When you download MetaTrader 4 and you get your account open, your demo account open, you'll get when the software opens up, you will get a chart or you'll get a screen. I'll show you what that looks like just now. The software shows you different currency pairs. For example, the euro versus the US dollar. For example, the euro versus the US dollar today might be 1.4530. What you see here, that 0.4530 here, is called pips. Anything after the decimal point is called a pip. Alright, so today it might be with 1.4530. So 1 euro will buy 1.4530 US dollars. 5 hours later, 1 hour later, 10 minutes later, that same euro in the market will be worth 1.48000. Right? That's a difference of 270 pips. Now, if at the time you were using the software, you jumped in and you decided to buy the euro US dollar pair at 1.4530 and hold it for 5 hours and the price went up to 1.4800, you actually make money, 270 pips. But the amount of money you make will be dependent on the amount of capital that you have in your account. Right? A pip can be worth anywhere from 10 cents to $20. So that $270 5 hours later can either be worth $2.70, it can be worth $270, it can be worth 2,700 US dollars within 5 hours. That's how the market works. Same thing with the British pound versus Canadian. Now you'll see a lot of these abbreviated, GBP slash CAD. That is the Great British Pound against the US dollar. So see now the pound is worth 1.7685. It'll give you 1 pound will give you 1.7685 Canadian dollars. 2 hours later, the pound can now buy you 1.7900. That's a difference. It went up by 215 pips. I don't know if you get me. You subtract one from the other. Anything after the point, you subtract it. 215 pips. If you had bought the GBP CAD pair at 0.7685 and you held it for 2 hours and at 2 hours later you decide to sell it back at 0.7900, you would have made 215 pips at either 10 cents, at either $10, at either $20 a pip. That's how it works. Alright? Well, I think I covered that already. A pip can be worth anywhere from 10 cents to $20 a pip. Now, I'll tell anybody with a $500 US account, when you're ready to open your live account, if you decide to go that way, you would basically, I would advise them to buy and sell in pip values of say anywhere from 10 cents to 50 cents. If you have a $10,000 US account, you can trade anywhere from $5 a pip to $8 a pip. I would leave the $10 and $20 a pip to people with larger account balances like 20,000 US, 30,000 US dollars. You got that? Alright. So let me give you all an idea of what MetaTrader 4 looks like. Okay, people. This here is what MetaTrader 4 looks like. Alright, I'll take you all to one of my demo accounts. Alright. If I open here to the side, you'll get used to that. On the side here in the market watch corner, you can get a list of all the currency pairs that you can trade. So if I take right click on GBP CAD and I go to chart window, right, I get a chart of what the British pound versus the Canadian dollar was worth. If I change that to candlesticks, I right click and I take off the grid, here's a plain chart, right? So my account balance on that account was 13,430 euro dollars. You can open a euro dollar or a US dollar account. Alright, I decided to sell the British pound versus the Canadian at 1.77074. I sold it. You can see with the line, that green line here is where I sold. You can see the little whitish candlesticks going down. That's actually meaning that the price fell. Right, so the price has fallen from 1.7074. It has fallen to here, current price of 1.76688. I sold that at $10 a point. So in a matter of 2 hours, that's 14.58. That's 3 o'clock. No, that's 14.58. Wrong time. Anyways, that's about 2 hours ago. 2 hours ago, I sold that. I sold 3 lots at $10 each. That's $30 in all. right? The price moved my way. I made, well, it's currently in a price of $808 euro profit. Had the price decide to go up at this point instead of going down, you would have seen a minus there, meaning I would be losing money. Alright guys, now this chart here is a 1 hour chart of the British pound Canadian. I can take a 4 hour chart by clicking here. I can take a daily chart by clicking here. Alright, so let me just give you an idea of what a daily chart looks like. This is the daily chart here. If I take that line here and I go across, what date is that? The 4th of November. So if from the 4th of November, the market closed below here, the price of the pound Canadian was 1.81875. If I decided, you know what, based on my analysis and looking at the research and stuff, I expected that to fall. So I sold it here, right? And today, let me see how many days it is. Well, it's about 2 weeks later. The price has fallen to 1.76639. That is basically 81875 minus 76643. That's a difference of 523 points. You with me? Or pips. So it fell. If at the point at this line here, if at the point I sold at this line here, and the price instead of falling, it went up instead, like here, like where it went up here. If when I sold at this on that date, the price didn't fall, but it went up against me, you would have seen a minus. I would be losing money, right? However, I would put something called a stop loss on my trade to tell my broker, if the price gets from 1.81875, if the price goes up to 1.83186 instead of down, close my trade. And my trade being in a minus means that I would have lost some of my capital. That's how it works. You put a stop loss on all your trades. So I would have probably put a stop loss just above here. So you can see maybe if I took the trade, the price probably went up a little bit, but it skyrocketed down. Right? The red line you see here, let me just delete that. That red line you see here is my stop loss, which you can see SL on the account here. I sold at 77074, right? I put a stop loss at 7865, which is that red line here. So if the price basically comes up here before it hits my take profit and touches that price here, I will lose money. However, if it falls and it goes down to my take profit, which is the other red line here, you can see TP is take profit, SL is stop loss. If the price touches here before it touches the stop loss, I make money. If it touches my stop loss before it touches my take profit, I lose money. Alright guys, that is basically how you can trade the currency market. And like I said, you can look at several currency pairs at one time. Alright, you can trade any one of them at any day, at any time. The trick is knowing which one to buy and which one to sell. If you all understand that video and there's anything that you want me to review about what I discussed in this video, link me back via Facebook, so I will send you guys some more videos and you will let me know whether or not I'm actually moving too fast or